Good afternoon, everyone. Welcome back to the FinTech and Future of Financial Services stage. We're now on session 4. So my name's Amy French. I'm your MC for the day. A quick reminder, if you haven't already, do join the conversation online and tweet using the hashtag CogX 2020. We've already had a great day, already a very busy day full of panels, but we've got another great one coming up for you now. This is How is AI transforming financial crime compliance? This is being moderated by Alain Falys, partner at Firestartr. Can I welcome Alain into the mix? Hi,
Hello,
Alain. Thanks so much for joining us. Can you start by introducing yourself, the topic, and also introduce your panelists? And I will let you lead the way and have a great session.
Thank you, Amy. Hi, I'm very excited to be at CogX 2020 and first time moderating at CogX. I am a partner at Firestartr, which is an early stage fund funding companies in technology, fintech, e-commerce, primarily in Europe. I am myself an entrepreneur in payments and fintech since about 20 years. My latest company is Yo-Yo Wallet, which I co-founded in London. Today, we're going to talk about a topic which is interesting in the sense that the AI component is really the interesting bit here. So this is one of the very few applications of AI that I have observed that has some real use cases and lots of successes. It's around financial crime compliance, which is this topic related to global watch lists, sanctions, regulations around money laundering, and so on and so forth. So we are going to be discussing the various use cases here with this panel, why these financial crime compliance exists in the first place, how is AI applied to solve these compliance issues within financial institutions, but also corporates, and then talking about the pitfalls, the benefits of AI in relation to these applications. So I would like to introduce a panel of real experts in the topic. And I will start to introduce our panelists, who I think will appear on screen very soon. I will start with Lewin from RegTech Associates. Then we have Julia Markiewicz from Silent 8. Following, we have Charlie Delingpole from ComplyAdvantage. And finally, we have Nasser Sweileh from Pelican.ai. Welcome, everybody. What I would like each of you to do, starting with Sian, is to introduce yourself and your company, please.
Thanks, Alan. Lovely to be here this afternoon. We're primarily an advisory firm to all the amazing RegTech vendors out there that are helping regulated firms meet their compliance obligations. We perform a lot of research across the RegTech market, and I think financial crime is the largest category that we have, with over 300 products that we're tracking on a regular basis, many of whom are actually using AI and machine learning to help regulated institutions with their financial crime compliance. I'm very glad to be here today. Thank you.
Thank you, Sian. Julia, may I ask you to introduce yourself? And
thank you very much for pronouncing my name right. It's very difficult to do it correctly. So my name is Julia Markiewicz. I'm one of the founders of Silent 8, and Silent 8 helps banks to stop the financial crime. So basically, we help banks around the world to make it better and stop the bad actors in the financial crime. So we work with the biggest banks around the world, and we actually have offices around the world, which is Singapore, Poland, UK, US. That's all for my introduction. Super happy to be here. Thank you very much for inviting me.
Thanks, Julia. Charlie, may I ask you to introduce yourself?
Hi, my name's Charles Delingpole. I'm the founder and CEO of ComplyAdvantage. We are currently 250 people. We've raised $40 million. We have 500 direct clients and then thousands more via partners. And we do two things. Firstly, we have a real-time database driven by machine learning of terrorists, money launderers, human traffickers, and other criminals. And then also we offer a behavioral transaction monitoring platform that detects different patterns of money laundering and terrorist financing for banks, payment companies, fintechs, high-risk corporates.
Awesome. Thanks. Nasser.
Thank you, Alain. My name is Nasser. I'm the financial crime strategy specialist heading the team of product managers at Pelican. Pelican is a global provider of AI-powered financial crime as well as payment solutions. We've been doing AI for the past 25 years. That includes in the financial crime in specific, because it's the topic of the day, screening solutions, transaction monitoring for AML, transaction monitoring for fraud, anti-fraud, as well as trade compliance, including trade screening and trade-based money laundering. I personally have been in the domain of GRC, governance, risk, and compliance for the past 15 years between financial institutions and technology companies. And I'm thrilled to be here in the panel with you guys.
Great. So in order to set the scene for our audience here, I think it would be good to get a feel for what is financial crime compliance, what falls into that bucket. And I've agreed with Charlie that he would give us a little bit of the high level view of what that is, so that we're all on the same page here. Charlie, can I ask you to just give us some more colors?
Yeah. I guess what financial crime isn't in this space in terms of financial crime compliance, it's not fraud. I think that's a separate category entirely. So what I'd say primarily is we're concerned with money laundering and the opposite of money laundering, which is terrorist financing. So money laundering is taking money that's bad and making it good. So taking money from drug deals or bank robberies and then allowing Pablo Escobar to buy a house or to buy yachts, and the process of making bad money good. The opposite, of course, is terrorist financing, which is taking good money, as in legally clean money, and then using that for bad purposes, like funding a terrorist attack. So financial crime compliance in this area is dealing with both those issues. And then, so those are the threats. And then primarily, we're trying to understand how to prevent those things. And so in my mind, that's either looking at the entity that's applying to become a customer or make a payment, or looking at the behavior. So looking at the kind of transactional patterns and flows. So that's what I think in this regard, financial crime compliance is dealing with.
Can I add some more from my perspective?
Sure.
So thank you so much, because I always have this situation on my interviews. When I'm interviewing someone to join our organization, they always give these two examples. But for me personally, there is much more into it, which is also woman trafficking, animal trafficking. This also builds up under this group of financial crime compliance. And like, what does it mean? Like, what is the human trafficking? What is the woman trafficking? Easiest example now with COVID, everyone watch a lot of movies, so you can relate to what is Taken, right? So basically, Taken is the girl who goes abroad for sightseeing, and then her father, the young Nasser, tried to get her back and basically make sure that everything is correct and in line. So basically, I would say that not everyone have a father like Liam Neeson to help us. That's why regulations, this allows us to set some rules to help us to make sure that bad guys are out of the game.
So we mentioned money laundering, terrorist financing, human trafficking.
Animal trafficking also. Sorry.
So I think human trafficking and wildlife trafficking are examples of precedent crimes. So there are 1,000 different crime types, right? But then once you got the money from those crimes, as in you've run a brothel or you smuggle people overseas or you've robbed a bank, right? Then that money is taken and then it's laundered to make it clean, right? So
I absolutely agree.
these examples of precedent crimes, like, so fundamentally it's money laundering and terrorist financing, and then they're precedent crimes, and the proceeds of those crimes are then laundered.
Correct.
I want to add a little bit about the kind of the regulatory framework. So I think because money laundering happens on a global basis, the Financial Action Task Force for how nations should deal with money laundering, and those are then interpreted and put into law in national context. So there are slight differences, but the FATFA, the Financial Action Task Force, they do monitor on a regular basis how well different countries are doing in terms of being compliant with those recommendations. And certainly here in the UK, we have a number of bits of different legislation, and those are enforced differently depending on the industry sector. So it very quickly becomes a very complex framework of rules and regulations that financial institutions have to navigate.
Nasser, you wanted to say something?
Yeah, I actually wanted to just elaborate a bit on what Julia mentioned. So I agreed, as Charlie mentioned, the real issue that we're dealing with is basically money laundering and terrorist financing. But why do we have these regulations, as he mentioned, and as Julia elaborated? It's because those laws and regulations are there to protect the society, to protect it from multiple kinds of crimes. Because in specific in money laundering, you're trying to launder or make those this money that proceeds from crime look legitimate. And this would mean that if you don't put anti-money laundering laws and regulations in place, this means that you're making it much easier for the criminals to do the crimes they're doing, and that would include all what Julia mentioned and more. So human trafficking, weapons of mass destruction. From a social perspective, you're talking about drugs and the impact of drugs on youth. So it's really put in place to ensure that those crimes are more because if the objective of the crimes in money laundering is the money itself, then if you're prohibiting those criminals from using those proceeds of crime, then you're making it much unuseful for them to do the crime. And as for terrorist financing, I think the objective is very clear. It's clearly stopping those terrorists from being able to achieve the terrorist acts that they're doing. So those regulations are important and are enforced because they do protect the society, and they protect even on an economical aspect as well. Because having money launderers win in achieving the money laundering activity means you're basically putting the whole economy in risk. The governments plan based on what they know, the banks and financial institutions plan on the data that's available, but then a money launderer comes, puts the money for purposes of layering it and making it look clean, then takes it out of the economy, keeping the economy in a mess. The private sector would not be able to survive this as well, because a money launderer is ready to lose 10, 15, 20% of the capital just to make the money look legitimate, which means they become more competitive than the private sector.
So
that's
what you're saying is that they are useful. They're not just a burden, bureaucracy, red tape. Is that the view of everybody? How do your customers see it?
I guess to add a bit of scale to the problem, the UN has estimated that between 2 and 5% of global GDP is laundered on an annual basis. So it's a huge problem, and I think financial institutions are starting to, they play a really pivotal role, because you follow the money to catch the criminals, and they're kind of in that intersection between society, the financial system, and law enforcement. So they're at that point where the money is actually being made good from bad, as Charlie was saying earlier. So they have, a responsibility to make sure that bad money is identified.
Yeah, I absolutely agree. So it's basically with the big power of being a bank, not only have our money, but also have all the information about us. They have to come with big responsibility, right? So they are responsible for the power that we are giving them by giving us the money and information about us, right?
Okay, so let's talk about the customers then, or the customers of what I mean by that is the financial institutions, the banks, the people who have to comply. How have they done traditionally? Let's park AI for a second here, because AI is still fairly new, and I'm sure you guys have great examples to share about use of AI. But let's first understand how these guys have done, these corporates, these banks, financial institutions of all types. How have they done traditionally? How has that worked?
Well, this is basically a journey. Huh? I mean, this started a while ago, 15 to 20 years ago, and it was very simple and basic, and it was very manual, actually. I remember the days where things were done through spreadsheets, just a bit of aggregation of some data, and that's it. That was what compliance was about. It was more about, for example, trying at a certain point of time to screen names to make sure when you're opening an account or when you're receiving or sending a wire transfer that the person is not on a blacklist, but merely very simple and basic algorithms. And then with time, obviously, the requirements grew, the regulators became more aware, and with that, they started imposing more and more requirements. So they started talking about, as Charlie mentioned, the need for transaction monitoring the patterns and the behaviors. So from there started the transaction monitoring requirements. It started as a very simple rule-based engine, and then little by little people started to get aware of the risk aspects, so risk-based solutions. To be honest, till very recently, some aspects of compliance have not been, or for financial crime in specific, haven't been sufficiently tackled because technology wasn't allowing that. And in specific, I'd like to talk about trade, or mention trade compliance, so trade-based money laundering, and all the amount of documentation that needs to be reviewed, and that is still being reviewed manually. But there's zero guarantee that you are sure you are in compliance from a financial aspect, you're not laundering money. And I think, Sian, you mentioned that as well. Like, billions of dollars are being laundered annually through just manipulating the price of products through trade. And till today, it's not well
because it's paper-based in this case, because a lot of papers. So who's actually pushed for doing it differently? Is it the regulator because they saw that rules-based type of processes were not reliable, or is it the banks who started to realize that they could use better tools? Charlie, do you have a perspective on this?
So I think the key driver is both it's both economic and outcome based. So what you've seen historically is humongous amounts of money being channeled into financial crime, as in thousands and thousands of bodies. And yet, despite all that investment, despite all that technologies, despite all that effort, still you have every year hundreds of billions of dollars of fines, as in every few weeks, a major bank is fined by a regulator around the world for some sort of scandal. As I think, as we saw with Danske Bank, the CEO was fired. As we saw in Australia, again, the CEO was fired then. So it's become a huge issue for CEOs, for shareholders, for every bank, because of the huge cost, both in terms of the overall operational overhead, but also in terms of the failure of these processes. So I think that's what's driven the need for new solutions in financial crime.
I'd add to that, there are some real specific problems as well. So Nasser mentioned the use of these rule-based systems. We know, unfortunately, that criminals are very clever and they will find ways around systems. And so they adopt a very dynamic approach to money laundering. And rules-based systems simply can't keep up with their dynamism. And this then leads also to a lack of accuracy, the creation of huge numbers of false alerts, which absorb resources that could be focused on actually investigating real suspicious activity. There's also a lack of context for investigations through these rules-based systems. And I think the other issue is the enormous amount of data that's required to sift through, and the quality of that data and the maintenance of that data. All of those are huge challenges, some of which can be resolved through using more innovative technologies like AI.
Just a data point, how many people would a large bank, let's take one of the top 10 European banks, would have employed to manage financial crime compliance? In order, are we talking about 10 people,
So,
100 people?
like,
50 people?
if you look at a large US bank, for instance, they'll process trillions of dollars of values of payments. They'll do, say, 2.5 billion individual payments a year. And from that, they'll get 100 million matches, as in false positives. Each false positive will cost $300 to remediate. And then maybe out of that, there'll be 1,000 true positives. So that will imply, simply from their payments arm, they'll have, say, 4,000 people in compliance. Look at someone like Revolut, right? Their biggest team is in Poland. So their two biggest teams are customer success and compliance. And that's despite huge amounts of investment in compliance. Still, the biggest overhead by far is compliance and customer success. So it is the most pressing and unsolved problem within financial services today.
Yeah, in my opinion, it's just like the environment change, right? So we use, as a normal humans, like we started to drive on the horse to go to our neighbors, then we switched to the cars, and then from the paper map, now we use Google Maps, right? So everywhere we use the technology, so why we should leave our financial crime compliance people with the pen and paper, right? So it just makes no sense, because at the same time, Narcos is already using, like all the drug lords and everyone else is using already the super technologies, right? In 007 movies, you always can see the villain is working very hard to be ahead of the good ones, right? So basically, in my opinion, back to the movie examples, financial crime compliance team should be like Batman. He's a normal human, but he's a Batcave with the all IT software and all of the system that allows him to be a superhuman, to allows him to protect us, right?
So one human and lots of software.
Exactly.
So what is it then? What type of AI tools do you have you seen? Have you deployed that are successful today, not future, but today are successful in making this whole compliance more efficient? Who wants to start?
I'll go, if that's okay.
Go for it.
Okay, so I think we see these tools in two primary areas. So one is on the name screening, KYC side of things, where techniques such as natural language processing can pull data from unstructured data to append that to structured data to be more accurate in terms of the matching of names to the watch list, to the PEP list, to the sanctions, to the adverse media screening. And then on the other side, we're seeing a lot of supervised and unsupervised machine learning being used for transaction monitoring. And I guess the way I look at that is that supervised machine learning is trained on past data and detects known patterns of suspicious activity. But where it gets really interesting is when you can use unsupervised machine learning to actually look at anomalies and anomaly detection. And that's really where I think the power of AI is in reducing those false positives and adding that additional context to be able to more effectively identify suspicious activity.
Thank you, Sean. Nasser, you wanted to?
Sure. Yeah. Well, basically, as Sean mentioned, there are two aspects. There is the part related to the effectiveness of the solutions and the part related to the efficiency. Effectiveness in the sense that your solution is working and doing what it needs to do. It's meeting the regulatory requirements by stopping money launderers and terrorist financiers. And then there's the other aspect, which is basically the efficiency of the solution, minimizing the false positives and making it happen in a lower cost. And even regulators sometimes look even at false positives as a compliance risk because you're giving less amount to investigating real possible hits. So what happens here is like, in the case of screening, for instance, NLP, and in transaction monitoring, NLP is extremely important, and it's helping.
Natural language processing, yeah?
Yeah, natural language processing enables the solution to become more intelligent, to understand the context, to understand the semantics, to understand what is being screened or what is being monitored, to ensure that, first of all, if this is a false positive, so if I have the name of a blacklisted entity, but followed by the name street, then this is probably the address, not the country, and it shouldn't generate a hit. Or in the case of machine learning, where you would either minimize false positives by better understanding the behaviors of the users who have been reporting the SARS or identifying anomalies, so new typologies, as Sian mentioned. The NLP as well is utilized heavily there. But in a very recent domain, the trade-based money laundering required both OCR and NLP to make sure that all this unstructured data, all those documentation where you're laundering billions and billions of dollars is being now under the monitor and is being seen. The power is seen mostly when you combine those tools together. So we had a case where, for example, we were working with one of the major European banks in Europe, one of the largest in Italy, where we utilize NLP plus machine learning to minimize false positives. And in certain cases, you reach to minimizing 70% or sometimes even 90% of those false hits that happen. And that means taking huge amount of time from people who are supposed to be spending it on legitimate cases that need to be reported, or even the amount of US dollars, the dollars that are being paid and the money that is being paid for those people who are spending the time investigating. Charlie mentioned that there are large tier one financial institutions that have hundreds and hundreds of staff who are working just on releasing and blocking specific things.
So the false positive, I've heard that reduction in false positive is a big win, right? I've heard it twice. Charlie, the use of AI today to solve these problems?
Yeah, so specifically what I have done is, so if you look at incumbent databases like WorldCheck, Dow Jones, LexisNexis, they would have a team of 400 people who would manually compile a database of high-risk entities. And as soon as that was finished, they'd have to start again, as in it's impossible to track all 8 billion people and companies in the world. And therefore, what we've done is we've just built the full stack machine learning, ingestion, analysis, linking engine to do that via machine learning. And therefore, as soon as someone's noted as being high risk across tens of thousands of different sources, we can automatically ingest and then link to thousands of different pages and profiles, and therefore eliminate financial crime. And so that's only possible because of the huge investment in technology and machine learning and pattern recognition and the semantic knowledge graph linking. And it's far superior to the kind of WorldCheck, Dow Jones, flat file database. We'll send you an update in 2 months' time. We'll have a team of analysts in a basement in Canary Wharf copying and pasting stuff, right? That's just super archaic. And I'd argue this approach is evidently superior.
Right. Sounds superior for sure. The majority today of financial institutions, roughly speaking, are still using the traditional methods of 4 eyes and spreadsheets and things. So how advanced is AI, do you guys think?
I have to disagree with what you're saying because they're using us. Most of them are using us, which is not pen and paper. So,
Okay.
So basically, what exactly what Charlie says, right? There is a lot of data that you have to keep up to date, right? So basically, what we are doing again with the movies, let me give example what my company does. So basically what we are doing is helping you to stop with financial crime by being your Sherlock Holmes. So basically anytime there is money transfer happening or you're onboarding the customer, you need to make sure who this person is, right? Is this person legitimate or not? So we conduct the investigation, we gather all the evidences, and we solve the case. So basically your analysts don't have to be in cages or caves or anywhere around the world, because we will do it fast forward. Because nowadays what is really important also from the customer perspective, as me as a person who wants to open the bank account around the world, anywhere I am, I really want to make it fast. I don't want to wait for someone to gather all my information and then confirm where I'm actually born, or do I have dual citizenship, or have I committed a crime or some in some weird place. So basically what we are doing is, to summarize, we are your Sherlock Holmes, and basically we work with all of the data gathered sometimes by the charity.
Okay, so I get it. So the case for AI is super strong. It's dead obvious from what you guys are saying, and the examples speak for themselves. The question now is, the people who are in these jobs around financial crime compliance and people who check these various blacklists and so on and so forth, they're obviously going to be replaced by AI. Is that an issue that comes up, like it may come up in other industries, like the automotive industries and so on? Is that an issue that you observe or that comes up when you talk to financial institutions? Is that also a barrier to decision making around AI solutions?
I'll take that one if you like. I think the types of conversations that I hear in terms of financial institutions and adoption of AI is that you need to take a risk-based approach to fighting financial crime. You want your resources focused on the highest risk customers, the highest risk transactions, the investigations that are complex and lengthy and require a lot of human interaction and intelligence. What you want to do with AI and machine learning and NLP and OCR is automate the 95% that is lower risk to your organization, which frees up your human resources to use judgment, to apply intelligence that computers can't, because those cases are borderline or they require additional context. So I don't really think that financial institutions are scared of AI replacing their compliance teams. I think they see it as an opportunity to upskill those compliance teams and have them focus on the higher risk customers and activities, and actually add value doing their jobs rather than pushing data from one place to another.
If I may add here, I agree with you, Sian, to a certain extent, but there's still some concerns, specifically with countries that are heavily unionized, where the unions come and say, oh, so you're implementing AI, what's going to happen to the staff? Now, yes, there might be cases where some people might be replaced by machines, and that's the objective of having artificial intelligence and working it. But there are other factors that play a role here. Remember that the volumes of transactions worldwide are increasing. The need for faster stuff is also increasing, STP and straight-through processing, as well as instant payments is requiring things to happen instantly and immediately. There's no time for users to go and investigate manually. When you add on top of that, as you said, the 4 eyes, so you would need a maker and a checker. So it would be a huge amount of work. So it doesn't necessarily mean that once you introduce machine learning, or if you're using NLPs or any kind of AI, that you will automatically get rid of some of the stuff. You might minimize the cost, and that's where you need to look for other opportunities and capabilities for them. But there's still a lot that is happening, and there's a lot of delays that are happening because of the amounts of false positives, the amounts of messages that are stopped. And at least artificial intelligence is minimizing part of the work, then that's a good thing. And as Sian mentioned, if it focuses on the low risk parts and gets them to pass and keeps those cases that are more risky get investigated by humans, then that's also a win-win situation here, I think.
So if I'm a financial institution and I've never used AI really, other than some proof of concept, which I'm sure most financial institutions have done, but I've never done it in a production environment. What does it look like from an implementation standpoint? I mean, how is that a daunting task to start to incorporate this type of software, or is it just a matter of like any software? Solution requirements, POCs, some negotiation with various vendors, and off we go. We implement it. Is the AI component making things more complex in terms of implementation, or not?
As we all maybe want to say, one small step for the man, one giant leap for mankind, right? For the financial crime when you start implementing AI solutions. So it's basically like from our perspective, it's the same as any other software, but definitely there is some hesitation, but there is no magic in it. It's logic and mathematics in our case. So it's a white box, so you can read it, you can understand it, no magic inside it. So it's just another software. And of course, as if you want to implement anything in such a big organization like banks, this will take you a decent amount of time.
I think
any other solution, but I do agree with you that there's a myth that AI, artificial intelligence, you plug it, it will do the job for you by itself. And it definitely is far from that. So the first challenge we face with financial institutions is them understanding what AI is and what AI is expected to do and how it could do it. Because there are phases of training, the data cleansing. I think Charlie wanted to talk about that as well. But it's not like plug and play, and that's something that needs to be understood. But what is definitely valuable is that yes, you invest in it, but once you've done this investment, once your system is working, you will see the reduction in cost on that accumulates year over year. And that's what is the beauty of those solutions. They protect your reputation by identifying, making your solutions more effective, but also they minimize the cost for you continuously, making things much, much, much affordable and, enhances your profits.
Before we get to Charlie's first, you mentioned a large Italian bank. How long did it take them to test the system before it went into production?
Well, to be honest, this took about 3 to 4 months, and everything was basically implemented, tested, and NLPs and machine learning, everything has started working, and we've achieved excellent progress with the bank, to be honest. And the more you use it, the more you see results. So as long as you're using it and you're continuing, because it all depends on the data that you're training and the data that you're entering to the system. So the system learns, identifies new stuff, and gets better results always.
And Charlie?
Yeah, I think I guess there's the expression that AI is like teenage sex, in that everyone says they're doing it, but very few actually are, right? I guess if you're raising money, it's AI. If you're hiring a developer, it's machine learning. And then when you're actually in production with the code, then it's statistic regression, right? So it's like the apex of the... Sorry?
Or data mining.
Yeah, or data. Yes, I mean it's like an apex of the Gartner hype cycle, right? So it's such a kind of broad term, right? It's like regulation or compliance, right? It can mean so many different things and so many different forms and terms. It's just so amorphous that I guess it's kind of loses most of its meaning, and therefore you have to be way more specific with regards to what you actually mean by AI, right? In terms of like, it's just kind of, you can kind of make vague allusions to somehow it's kind of usable or useful, but as a term, it's just kind of super broad. And I guess to people who are kind of hardcore into it, like, I guess it's a consequence of the kind of time we have available that we can't really go into that much detail to actually explain the nuances behind it.
Yeah, I guess it's not
big data, right? It was before AI was big data that actually everyone used, but no one knows actually in the end what is it.
I guess by now, I mean, there's been a lot of education. By now, most institutions will understand that it's not robotics. It's not just an automation of a task. It's something a bit more clever than that. It's cognitive. It's self-learning. Do the organizations you deal with understand that bit? Because now AI is advanced, and there's many proof points around.
Absolutely. So for us, our Sherlock Holmes have to have all the data in all the different languages, understand it, and then tell you if your customer is legit or absolutely not, and you should make an action. So AI is the brain. So I always describe it as we give you empty child and you will feed them with the information, right? And it will learn exactly how your bank is making sense of the data that you guys have. But it's the learning part, and it's the being able to make a decision part. I don't want to take all of the time, so please, guys.
I just wanted to mention a survey that the Financial Conduct Authority and Bank of England did last year on the use of machine learning in financial services more generally, but they actually found that 2/3 of the respondents to the survey were already saying that they were using machine learning in one form or another, whether that speaks to Charlie's point about, this is just really logistic regression. But interestingly, the biggest use case was in fighting financial crime. So I think there really is a movement to adopt AI and machine learning specifically for fighting financial crime. And it's probably, as you said at the beginning, Alain, one of the most tangible use cases that's being seen at the moment.
So is the regulator going to force companies to use AI? Are we going to get to the point where if there's no AI, financial crime compliance doesn't comply? Are we going to get to that point?
Well, it takes me back to your previous question when you said, is it the regulator or the industry? It differs from a country to another depending on the regulator. There are regulators who pushed people for more regulatory compliance. There were other countries where the driver was really the financial industry. And in AI, I think it's the same thing. Some of them will be more open to that, some will be worried. But in all cases, the only scary thing for regulators and auditors, what they hate is a black box. They cannot handle a black box. If your AI is a black box that cannot be understood, explainable, interpretable, and auditable, they will not want to see it and they will not accept it. They need to understand why this is a false positive, why this was hitting or not, why your NLP decided to generate an alert or not to generate an alert. This is the most important thing for them. I think that regulators, when they see it and when it makes sense for them, they'll accept it, and they might even at a certain point of time push for it.
I think just to add a final point on that, I think it's really important to recognize that most regulators are technology neutral. They will not say you have to adopt AI for fighting financial crime. But what they will do is expect you to have robust systems, governance, and all of those things in place. They won't say you must use an unsupervised machine learning model for transaction monitoring. They're just not in the position to do that, and neither should they be, my opinion.
Thank you so much. I think we are at the end of the main stage. Amy is going to come back. There's going to be some questions from the audience, so we'll be back very soon.
Brilliant. Thank you all so much. That was a great panel, great discussion, and I'm sure there's plenty more that can be said, and that is why there is the Q&A room that those with the right tickets can join in 15 minutes, and you'll be able to.
Want access to more CogX videos? Subscribe now for free at cogx.co.